Okay, this is on the loan forgiveness. This is a worksheet. These are real numbers. We've eliminated any names, company name, etc. on it. And yes, the title is appropriate. We've got to be able to come up with a way of fitting 10 hot dogs and 8 buns. So if we look at the screen here, we have a particular client. They received $71,400, where I'm kind of moving top left-hand corner. And they've got 8 weeks to spend the money. 8 weeks, not 2 months, but it's 8 weeks. I'm going to come back to that, unfortunately, more than one time. And they have employees, employee 1, 2, 3, 4, manager. The base period is going to be the first quarter. Do we know for sure if it's the first 8 weeks of the year? No. Do we know if it's the last 8 weeks of quarter one? No. But we do know it, as far as we understand currently, the first quarter is the base period. So we took, in this example, and we know the rules may change. Keep in mind, the rules may change. And we're going based upon what we reasonably think the rules are. We take the average, and we come up with an 8-week period. So in this 8-week period, these were their numbers. Well, now we have to come down and adjust the rates for the calculations to come out with the hours to pay. One of the calculations here on the right-hand side is full-time equivalent hours. If you do not meet the same number of hours worked in an 8-week period of time, which in this case is May 10th, which is when the money is going to be funded. If you don't have the same number of hours worked, you're going to lose a percentage of your loan as not being forgivable. So you're going to have to pay it back. It will not be forgivable, a percentage. So we ran the numbers. Here's the numbers that they need to have worked every week. So by doing that, we come up with the total number of hours. That's the target right here. Again, I'm kind of circling it. That comes out to equivalent of 4.1 full-time equivalents. The reason why we have to do these calculations, let's look at the math. The math of coming up with your loan was last year's numbers. We took your, we'll make it really simple. Forget pension plan, retirement plan, and medical insurance, strictly wages. We take your total wages for the year, divide that by 12. That's a monthly number times 2.5. That is more than 8 weeks. It's slightly more than 8 weeks. So now we're taking a number that's higher than 8 weeks and then multiplying it by 2.5. And then we have to say that gross number, 75% must be paid in wages. When we've run these numbers, and we've run them a couple times just to make sure we aren't doing something incorrect. If you have the same burn rate, the same amount of money that you spent on your employees last year, in 2019, and you spend it exactly the same rate, normally your loan forgiveness will only be 80%. That's right here. This column right here, same burn rate, 80% is what's going to be, i.e. similar to quarter one right here. Take your pick. Columns are almost identical. You do the same burn rate, you will not get 100% loan forgiveness. You actually have to increase your wages because we are trying to fit 10 hot dogs into 8 buns. It's very difficult. Now, I'll make a comment about increasing the wages. Do not do this. This is our strong recommendation not to do this, what I'm about to say. Do not temporarily increase the wages to your employees. Don't tell them you're going to go up temporarily. Don't tell them you're going to go up temporarily so you can have your loan forgiven. Do not do that. There is huge risk to that. I'm taking the worst case scenario position. You're going to have employees come back at you and say, well, that's my new wage. They bumped me up. Then they took it back from me. I can imagine a number of lawsuits taking place over this. As an owner, think of the possible scenario. You go to court on this, and that former employee gets up on the stand and says, "Yeah, my boss was a shyster. He just wanted to get 100% loan forgiveness, and then he reduced my wages again." You've lost. Maybe legally not. I'm not an attorney on this, but I just want to take that route. So don't bump up the wages just for the sake of doing the loan forgiveness. You actually have to increase wages. Normally, how are you going to do that? It's going to be hiring more employees and getting enough hours in there. Because the owner, as an owner, the max you can take is $100,000 per year. Well, we got to do the new math on this one. It's not by month, it's over 8 weeks. So when we do the math, we take 100,000 as the max, divide that by 52 weeks, multiply that by 8. The max the owner or any employee can be paid is $15,334 over 8 weeks. If you do the math based upon the formulas for last year, it's $8,333 per month. As you can see, you're coming out behind on this. That's where we're fitting 10 hot dogs into 8 buns because we can't do it. You've already lost roughly $1,500. 833 times 2 is $16,670 roughly. Now we're looking at $15,300. You've already lost potentially $1,500 off the table that you got to figure out how to increase your wages overall to do 100% loan forgiveness. It's going to be very difficult for many people, for many companies to actually get 100%. And this is one of the reasons why I've been mentioning in the last week, 2 weeks, 3 weeks, don't get hung up on loan forgiveness. The math here, which we can now demonstrate, shows it's very difficult. So so we've got this worksheet, and we're starting to create these worksheets for everyone that we helped on getting the loan packages for, because this is the hard work. The other work was very time consuming, and the rules were changing. Now we get into the very difficult work of how to come up with the actual numbers. As I scroll down here, here's our target. Here's the target that we've got to get to get 100% loan forgiveness. And if we look at this column here, similar to quarter one, you can see, given the math, because the math is based upon 19, not quarter one, the math in this example works out. This client has to basically double their wages. That's an onerous task. Because the reason why this is onerous for this client is their real numbers, their rent is very low. That is their rent. And you can't go back and change the contract. That's your utility cost. Now this required column, this is kind of maybe under normal circumstances. That's the math. But in reality, we've got to get here. So what are we planning for? We're planning for this to happen. They're not going to get there. Only 53% of their loan is going to be forgivable. We know the target. There's the target. But if they do the same burn rate, they're not getting there. We believe a number of companies are going to have the same dilemma across the board. Because if we think about the math again, we did the math per the rules over a monthly period times 2.5. That equates to more than 8 weeks. And we multiplied that number by 2.5, but now we get 75%. It's got to be wages. Almost everyone is going to really have to go up on number of employees and hours worked to get to 75% just for the wage piece. And again, I'm going to reiterate, do not temporarily bump up your employees. Bonuses do not help because there's no hours associated with the bonus. So you're not getting any more equivalent hours in there. And if you start doing bonuses, again, the risk is you have to make a decision, but the risk is some employees are going to expect that to be part of their compensation, their bonuses, and some employees may understand it, but they're going to look at you as the owner and going, yeah, you're just trying to get a freebie. And yeah, I'm getting a little bit of money, but you're just trying to get a freebie. So this hurts. This hurts in conjunction with the fact that the IRS issued the rules last week that these expenses that you see on this sheet of paper are not deductible. So as a business owner, you're sitting there and going, well, great, all I've done is transfer money from the government to me to a vendor or employee. Sure, that's nice. That's great. But I, the owner, I've lost out on my profits over that period of time too. I'm not being kept whole. Oh, sure, I paid myself, but I'm not being kept whole. I'm not even close to being kept whole. I'm coming out behind. Now, granted, the objective of this was for employees, but we also felt the original intent of Congress was to make this tax deduction. Call your congressman and complain about that. In other words, call your congressman and complain to their offices that you believed that these expenses would become tax deductible. It does make it more fair. It's also important as a business owner, you want to feel more confident that, oh, great, I spent all this money, whether it's 71,000 here or 100,000 or 10,000, whatever the number is, that I, the business owner, I got an extra deduction out of this. That saved me 20, 30, 40% in taxes. I feel more confident because now I got a reduction in my taxes. I got more money in my bank account. I feel more comfortable going forward in June, July, August, September, October, that I have money sitting in my bank account that I don't have to pay taxes on because I got a deduction for it and I saved some tax money. And psychologically, it's really important. So we're going to post this down below this video. Call your congressman up. Complain to them. Get the IRS to change their position that this is not tax deductible. Because many of us, we definitely had that impression it would be deductible. So imagine you spend this money and you can't get a loan forgiveness. Clearly in this example, it's going to be difficult. You got to pay it back. You have lost profits. You're not feeling so good. You're to a certain degree, some of you are going to say, well, why did I even do this? Okay. Now, we understand it is called what it is. It's called Paycheck Protection Program. But for a lot of owners, you're not going to feel so comfortable and confident that this really helped you. It may have helped your employees, but many of you are just saying, well, we'll keep our employees on unemployment because we don't have enough work. And you still can't do a loan forgiveness. But then again, I've said this before over the last month or two, it's a cheap loan. 2 years, 1% interest rate. It's still a very inexpensive loan to obtain, no personal guarantees needed. Worst case scenario, you got to pay it back. That's okay too. So again, if you're doing this yourself, you've got to do a lot more work than what you can imagine. This is taking a lot of time to create and do. The banks are going to want something other than just you spent all the money. Some banks are going to want a lot of documents. They're going to want to see what your actual wages were, paychecks, pay stubs, taxes paid, make sure that you actually paid in your taxes, 941 reports, TWC reports, contracts, agreements, checks for the rent, utilities, medical insurance, premium, invoices, right down the list. They're just not going to accept, we believe, oh yeah, I spent all my money. I spent 75% on wages. I'm good. This is SBA. This is a government program. Documentation is going to be pretty important. Knowing your numbers, full-time equivalent hours, employees is important. It's 40 hours. It's not 30. It's 40. And this calculation, just as a point of reference, we're ignoring any pension plan, retirement plan, medical insurance. We're keeping this real simple for conversation because they do get more difficult. The other thing I will mention here, it was announced over the weekend. Unfortunately, no surprise because they keep making changes. The Treasury Department did say that all loans will be subject to audit. That doesn't mean they're going to audit them all, but all loans now are going to be subject to audit. Previously, they were only going to do the $2 million plus loans. Well, they've had a change of heart. Part of that is there's a lot of fraud. Where does the fraud happen? It happens at the $100,000 level and less. How many bankers are looking at a $10,000 loan or a $20,000 loan? Not too many, not in detail. And whether that's through a PayPal, a Bluevine, a Lendio, the lower the amount, the less scrutiny. There's a lot of fraud probably going on in that area. They've already set aside money in the bills for enforcement. That is audits. Whatever the current projections are for fraud, their numbers have been thrown out on the internet. I don't know what they are. I've seen them. I didn't try to memorize them. And what they're looking at in the audit is, did you actually need to get this loan? If your net worth is $10 million, did you need this loan? You could have borrowed from yourself. What if you had $500,000 sitting in a retirement account? You could borrow from yourself up to $100,000, pay no taxes on it for up to 3 years and pay it back over 3 years. We don't know the position that they're going to take on this. There's no rules. They're making them up as they go along. But if you, in theory, had the ability, or you had money sitting in a savings account or a money market account or in a stock market account, it's liquid. They might say, Mr. Taxpayer, you had access to plenty of liquid funds. You didn't need to borrow this money. Do I know what the penalty is going to be for that? No. I'm sure they're going to come up with something. So the takeaway from this is it's more than just wages. It's going to be very difficult to fit in a forgivable loan. In this example, we're using the same burn rate. And we're going to encourage this. Congress has got to resolve this problem. As a business owner, call your congressman up, complain that you want this to be deductible. I think that summarizes it up here for now. We know the rules are going to change. We don't know when they're going to change. And we don't know what banks are going to allow, what other banks are going to disallow. There will not be a linear answer to this, for sure. So feel free to watch this over and over again because it's hard to digest for sure. We're having a hard time digesting it, and we're going through these rules as best we can, as quickly as we can. And we're now starting to work up your sheets. You know, if we worked on your loan, getting it, that was kind of the time-consuming part, not difficult, but very time-consuming. This is now the hard part. This is where we get into the compliance piece. If you have any questions, shoot us an email, give us a phone call. You all have points of contact that you worked with on your loans. Others of you that need help, give us a call. Let us know what it's about so we can get you in the right bucket. Thanks a lot.